In 2025, over 13 million meme coins were created. If you invested in the vast majority of these meme coins, I mean 99% or more, you would have lost money. And this does not just apply to meme coins like Fart Coin and Ape Coin and SPX 6900 coin. Yes, those are all real meme coins. This also applies to the many alternative cryptocurrencies or altcoins that have been created ever since Bitcoin was discovered in 2008. And don't take my word for it, take a listen to the words of the founder of one of the most popular altcoins, Litecoin, and what he had to say.
My advice for myself would just to be, I think this will be surprising to a lot of people, but which is to be buy Bitcoin, buy Bitcoin, store it away, don't sell anything, and don't do anything else related to crypto and just sit on it and be anonymous. That would be my advice.
So don't follow in your footsteps.
Correct.
That's right, he said, don't do anything else related to crypto. Now, despite this, if you're not super plugged in and terminally online in the Bitcoin space like I am, you might not have known that the Litecoin founder said that. In fact, you might think that the crypto ecosystem is thriving. One of the most prominent venture capital firms in the crypto space, Andreessen Horowitz, recently put out a State of Crypto report, and in it, they report some very optimistic findings. While there is some truth to this, we really need to talk about the elephant in the room.
You better clear that Solana position. What's your lockup, 24 months? No, he's trying to sell it to me on text message. Yeah, of course he is. We're negotiating discounts. I just had the founder on the
you're
phone.
the whole thing up.
A few moments later.
But you're holding, correct?
Ish.
Yes, okay. Yeah, me too.
Well, I mean,
crypto VCs tend to be very, very optimistic about this space. And it's not rocket science. It's because they are invested in this space. And that is really the focus of today's video. By the end of today's video, you will understand why many Bitcoiners or Bitcoin maximalists that believe really just in Bitcoin ignore the rest of the crypto ecosystem. And a lot of it comes down to incentives. So without further ado, let's dive in. What's up, everyone? This is Brandon from Wealth Potion, where we talk about personal finance, investing, the economy, and sometimes Bitcoin. And today we're talking about Bitcoin and crypto. If you've been following Wealth Potion or if you've seen any of my videos about Bitcoin, you know that I distinguish those two groups completely. Bitcoin is not crypto. Now, of course, technically speaking, Bitcoin is what is referred to as a cryptocurrency, but what I'm really referring to when I say crypto is the crypto industry or the crypto ecosystem. And a huge player in the crypto ecosystem are venture capital firms. The intent of this video is not to pick on Andreessen Horowitz, nor is it to pick on venture capital firms in general. I have many friends that work in venture capital, and I think that they do provide a useful service to the world. Many people argue that the origins of venture capital come from the days of Christopher Columbus, when he had to raise money for an incredibly risky venture to explore the Americas. And a lot of these investors, or LPs at the time, were likely going to lose all of their money, but they put their money onto a moonshot bet, and that is ultimately why Columbus was able to sail across the seas. And so I hope any of my VC friends watching this, or even if you're just interested in pursuing a career path in venture capital, this is not to poo-poo venture capital as an industry. I am, however, pointing out a conflict of interest between the venture capital incentive structure and the world of Bitcoin, specifically the use case of money. You have to understand that Bitcoiners, true Bitcoin maximalists, come to Bitcoin from the lens of money. We Bitcoiners see Bitcoin as a better form of money. It's a topic we've talked about on many Wealth Potion videos when it comes to money printing, trusting the central bank, all roads leading to inflation. We don't want our dollars being debased by the government. We want something that can protect our wealth over the long term. The crypto ecosystem sees things a little bit differently. They ultimately see all of this technology not just as money, but as technology, as something that can solve problems outside of just money. For instance, if you are at all familiar with crypto, you've probably heard some of these terms thrown around, such as decentralized finance, smart contracts, blockchain technology, real-world assets on the chain. These are all phrases that the crypto industry uses, and it's because that they see the Bitcoin technology as so revolutionary that it could be applied to other use cases and other industries. The problem is that these are, again, moonshot bets. All these different crypto protocols like Ethereum, Solana, Zcash, and so on, these are all companies that typically have employees and foundations and a board of directors and venture capital investors that are all trying to be some sort of Christopher Columbus. They have some moonshot bet that they're placing, and they are trying to change the world. The problem is that structure, while it works very, very well for technology companies, does not work very well for money. If you look at many of these protocols that had early stage VCs invest in them, a lot of them had a private round, or what many refer to in the industry as a pre-mine. The reason it's called that is because many cryptocurrencies are mined, and the pre-mine is something that happened before the initial mining. So you and I, as retail investors, if we want to go and buy some Solana or Ethereum or one of these alternative currencies, we are buying it on the free market. A pre-mine means that some tokens were reserved for investors, for employees, for the foundation, and so on and so forth. To be clear, this doesn't apply to all cryptocurrencies, but it applies to a lot of them. And I would highly recommend, if you're interested in a particular alternative cryptocurrency, look up if they had a pre-mine or if they had any insiders. And you can understand why a venture capital firm might want to do this. Again, if you are familiar with how venture capital works, generally what they do is they invest in early stage startups and companies, fully expecting that many of their investments are going to go to zero. However, a few of those investments will grow exponentially and will pay for all of the other bad investments. Generally speaking, again, this is just a rule of thumb, but many venture capital investors look for a return from their companies within 7 to 10 years. Again, this model works fairly well for technology company because technology companies follow a general pattern of growth and adoption. That doesn't really apply to money. And so what happens is a lot of these venture capital firms, once they're invested in these protocols, they start to push the protocol to change things so that they can make more money. And again, I know that's a bold statement and I'm generalizing here, but that is the incentive structure of venture capital. They're not investing all this money out of charity. They want to make a return on their investment. And to make matters worse is if they did indeed get a pre-mine, or if they were in some sort of insider round before the public could access those cryptocurrencies, then if that cryptocurrency were to be adopted widespread as a global money or global monetary technology, then you're going to have some venture capital firm out in Silicon Valley owning like 1 to 2% of the money supply. This is completely antithetical to the Bitcoin ethos, the reason that Bitcoiners are so passionate about Bitcoin. And once again, don't take my word for it. Let's take a look at the words of Satoshi Nakamoto, the anonymous founder of Bitcoin. I'm going to read off from a post that Satoshi Nakamoto put on the P2P Foundation forums when he first announced Bitcoin. And I quote, "The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency. But the history of fiat currencies is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically. But they lend it out in waves of credit bubbles with barely a fraction in reserve. We have to trust them with our privacy, trust them not to let identity thieves drain our accounts. Their massive overhead costs make micropayments impossible." Trust is at the core of the Bitcoin ethos. And if you have a venture capital firm, or a foundation for that matter, owning a significant portion of the world's money, we just moved from trusting the US government and JP Morgan to trusting the Solana Foundation and Andreessen Horowitz. It does not solve the fundamental problem of trust. And don't get me wrong, I probably trust Mark Andreessen more than I trust Jamie Dimon, but Bitcoin is fundamentally different. You don't have to trust any individual person or team or board or venture capital investment firm. Bitcoin is a truly decentralized protocol. I've done a few videos about Bitcoin in the past, and I certainly will be doing more on Wealth Potion. So if that sounds exciting to you, subscribe to Wealth Potion and let me know in the comments what questions you have about Bitcoin. Or better yet, post your objections in the comments. I'd love to hear from people people that are Bitcoin skeptics or people that don't think Bitcoin is truly innovative, and I want to hear your best reason for why that's the case. I'd love to hear from you, and I'd be happy to address that either in the comments or in a future video. But again, back to crypto and back to the venture capital firms' dilemma. These venture capital firms have invested hundreds of millions of dollars, in some cases billions of dollars, into these alternative cryptocurrencies. And they have an incentive to make sure that these cryptocurrencies are successful. So when you read a report like The State of Crypto, or really any commentary on crypto from a venture capital firm, it is generally going to be extremely optimistic. And I want to poke a few holes in the narrative that they framed in particular. First and foremost, if we look at crypto developers, which are really the lifeblood of the crypto ecosystem. Again, these are basically tech startups that are trying to apply blockchain technology to other areas of the world and the economy. You need developers to do that. And if you look at crypto developers, it's been basically flat since 2021. Which was really the last bull market for cryptocurrencies. In addition, if you look at this chart that they use, they talk about what's called the market dominance or Bitcoin dominance within the crypto ecosystem. As mentioned, Bitcoin is technically speaking a cryptocurrency. So when you look at the total market capitalization of the crypto space, we can see very easily what percentage of the crypto ecosystem is just plain Bitcoin. Not only is Bitcoin firmly more than 50%, so a majority of the crypto market capitalization, it's been increasing over the past few years. Meanwhile, in the report, they use the term crypto 67 times, but they only mention Bitcoin 9 times. Kind of interesting, if you ask me. And last but not least, perhaps the most important data point that I want to leave you with here, and again, not to criticize venture capital firms, but to really paint a picture of the divergence of worldviews, is this graphic that they use around stablecoins, where they argue, and I quote, "Stablecoins can strengthen US dollar dominance." Once again, this is completely antithetical to the Bitcoin ethos. Bitcoiners do not want to have to trust the US dollar. While yes, you can make many, many arguments for the United States economy being the freest market in the world and being the most respective of human rights and blah, blah, blah. That's all well and good. But the US dollar is being debased by the US government and the US central bank. Bitcoin is our lifeboat. It was designed to protect our money, our wealth, our blood, sweat, and tears, our time from being debased with the US dollar. So while stablecoins are all well and good, and it is going to provide access to the US dollar for many, many billions of people around the world who have even worse currencies, Bitcoiners don't want the US dollar. We want Bitcoin. And I think that's a very fundamental misunderstanding between Bitcoin and the rest of the crypto ecosystem. And by the way, if you're already a Bitcoin maxi and you're watching this video just to support the channel, I want to say thank you. I have a special discount code for a micro seed plate. It's a product that I'm very, very excited about to be partnering with. You can check it out in the description below or check it out on the Wealth Potion website. As mentioned, I will be doing more videos on Bitcoin, including how to secure your Bitcoin through cold storage, or if you should buy Bitcoin through tools like Bitcoin ETFs. Because I do think that depending on your risk appetite, depending on who you are as an investor, there are different solutions out there for you. And if you want to learn more about money printing and why I think it is the most important concept for you to learn as an investor, you can check out this video here. As always, thanks for watching all the way through. I appreciate you, and I'll see you next time.